All right, everybody, welcome back to the Deposit That podcast. Today I'm sitting here with somebody I met on social media back in 2017. I gave him a deal that he said he would do, and he did it. No appraisal, no questions asked, so I valued his friendship and I valued his word, and we've closed numerous deals from there. Matt Barbaccia, welcome to the show.
Yeah, thanks, Jeff. Appreciate you having me on here today.
So I just found out earlier that you started your career in Arizona after college.
Yes, I did.
Let's tell everybody about it.
I went to college at the University of Arizona, Harvard on the West.
Did you focus at all?
I focused just enough.
On boobs and butt?
Yeah. No comment.
And blondes.
Yeah.
Boobs, butt, and blondes.
But yeah, went to school out there in good old Tucson and majored in business. When I was out there, I started working in commercial real estate for CBRE.
While you were in school or after?
While I was in school, yeah. While I was in school, and ever since, and that was in the early 2000s. That's what I've been.
And then how'd you wind up back on the East Coast?
So after I graduated from school, I contemplated staying there out west, and I decided that I was a New Yorker at heart, want to be back home. This is where all my friends were, my family. And that's really where I wanted to start and grow my business. So moved back and started working for some like the bigger national commercial real estate companies.
Did you find a big difference between like how Arizona moved from a speed, pace, level of cutthroat, and then coming back to New York? Was there like similarity, or was it very, very different?
I think it was definitely. There was some similarities. Listen, at the end of the day, the top of any industry is going to be hustling. I think no matter where you are,
regardless of demographic.
Yeah, I think regardless of where you are. I think generally speaking, obviously New York and any really big major city is going to be moving at a much faster pace.
Sure.
Tucson slower than say like a Scottsdale or Phoenix.
Right.
But listen, there's hustlers out there, just like there's like a lot of dead weight, just like here as well.
Interesting.
Yeah.
So you came back to New York, and what'd you get into?
So I came back to New York and I started in investment sales, selling apartment buildings in the Bronx, Upper Manhattan. And,
Was that just because you knew that area, or what?
So family was from the Bronx,
Yep.
and so I had like some familiarity with that area.
Mm-hmm.
And I was always told, pick an area where you want to be long term. And I felt that there's a lot of opportunity in the Bronx, Upper Manhattan. A lot of brokers were going after like the sexy Manhattans and sort of more present day Brooklyn
ticket items.
That and as a broker, obviously you get paid when things turn over. So you want to pick an area where yes, the big ticket price tags they help, but you also like where the Bronx, you want to get that call from the landlord saying I can't deal with this crap anymore. I'm sick of the tenant and
unload it.
Sort of like your rants.
I know
It's sort of like your rants on social
Yeah,
media,
yeah.
and you want to get that phone call and say, listen, I don't want to deal with this anymore. Like I want out of this.
Sure.
And because we get paid every time it turns over, so
Sure.
I'll sell your property today, then I'll sell another one, and make a living that way. And it was an easier barrier entry to get into because I went from the commercial leasing side to the investment side in the apartment buildings because the ultimate goal is always to own apartment buildings. And I felt for although you can make a good living at one of these commercial leasing side, the chance of going out there and buying like a institutional size office building was
tough.
Very tough to get into, but going out there and buying a 10, 20, 30, 40 unit apartment building was a much more achievable task.
Especially entry point in the Bronx at the time.
Correct, yeah.
Now, so you transitioned with hybrid into property management. Tell us a little bit about that transition and what caused that.
Yeah, definitely. So when the market started changing, and this is in like 2007, 8, 9, there's a lot of people that we were selling properties for, and we just couldn't get the price that they wanted. And we would have essentially like a sit down just like this and say, listen, here's where the offers are. Market's obviously changed a lot. It's shifted.
Yep. Banks aren't lending.
Yeah, so it's like, what do you want to do? Either like, this you're going to adjust to current day pricing, or we have to come up with another plan. So they would, at the time they would say, listen, don't want to sell it, but I also don't want to be managing this asset.
Right.
And they say, do you have someone that you can recommend to me that can operate this building? And, being in the business, tons of people that manage and operate buildings, but I never wanted to tie my name to some of these people because although there's a lot of great managers out there, there's also some people that have a very bad reputation.
Mostly snakes.
And I didn't want to refer it to say, person X, and then they burn a bridge, and then the person turns around, they're like, Matt, you're an asshole, you put me in touch with so-and-so, and then I don't get the business on like the sales side.
Sure, makes
in
you
the future.
look bad.
Correct. So I knew a guy that owned some buildings in the Bronx. He was just managing his own portfolio. And, I pretty much pitched him on the idea. I said, listen, there's a big opportunity here. Although property management is not where we want to be in a long-term business, I think it's a great avenue for us to sort of incubate those people on a brokerage side.
Sure.
And then, we can tie in the scaling and raising capital to go out there and buy buildings, because then we have like an actual, like we actually know what we're doing.
Sure, and you have access to properties.
Yeah, we access to properties, and we know how to like handle different issues, and people will feel confident to invest in us to go out and buy properties. So that's what we did.
Now, for those of you listening, it turns out that your partner was actually my landlord. My junior year in college.
Yeah, so funny. Yeah,
it's crazy.
Yeah, really small world. Even how I met you.
Yeah.
I literally remember. I was at my mother-in-law's house. I'm like sitting there on her rug.
Bored.
Yeah, I was sitting there bored. Like, what the hell am I doing? Just stalking random stuff, looking up. Maybe like airplanes or random places to travel, houses in North Dakota.
Yeah. And there comes the mortgage quarterback.
Yeah. And, then, and I'm like, you know what? Let me just message a couple of people. I stumbled across your page, so I messaged you and like 5 or 7 other people. And I remember then like you messaged back, and I got a couple of the responses. And then I talked to you when I was down in. I think it was at like Triple Play or something, and then we made the connection with the Bronx.
We closed the deal in like the first 30 days.
Yeah, that was a beautiful deal. Thank you very much. Nice.
I've had car loans double the amount we lent on it, but look, we got it done. That's all that matters. But that's one of those relationship builders that I think that, again, like, for someone like myself, now everyone's not going to appreciate that deal, right?
Yeah.
Terms maybe not be the best, points not be the best, but I asked you if you could do this deal. You got it done, and you gave me your word, and that was it. It was kind of like, let's start the relationship off this way. And that obviously wasn't a big risk, you know what I mean? Like, you were very well secured, and the client seemed somewhat reasonable and knowledgeable.
Yeah, the deal seemed, okay, and it was really more to invest in a relationship with you.
Right, but that I think that's the key of the game. That's where I think people lose focus today is like those relationship builders, Well, I'm not making any money on this. Yeah, but again, you do this deal, we make a couple dollars, and then that big ticket item comes down the road,
Yeah, the way I look at listen, as long as you're not going to go out there, we're going to lose the capital that we're investing into it. If I'm going to go out there and spend X amount of dollars a month in advertisements, and who knows what you're going to get, this is like a great way to sort of break bread and start the relationship.
And still make some money.
Correct, yeah.
So now, what got you into the hard money lending business? Obviously, so you did investment sales, you did property management, right? You own some properties. Yeah. What sparked that, entry into the private lending space?
So we're mainly, starting in, I think it was like 2010, buying properties around Fordham University and expanding on the model, buying properties, redeveloping them. And it just got to the point from like an equity investment perspective, the yield was just so low. So, it got to the point where we were only able to maybe pick off like 1 or 2 deals a year, but it was very hard to really scale.
Sure.
It sort of came more of like just like a passive business.
Yep.
So, we always did private lending, but on like a much smaller scale, more like, like a friends or family type person was referred. They need a couple dollars, and you sort of pass the hat and do it that way. But we just felt it was a great way to not only like generate some yield, but also stay connected to deals and some like carrier deals and learn the market in a different way. And also we think and also thought back then that it's a much more scalable business than being on like the development side.
Now, what's been your experience? Obviously, we've been doing this about 3 years now, heavy 3 years into the lending. What's been your experience so far? Do you like it? Do you not like it? What are the opportunities? Where are the holes? Where are the problems?
The market has changed and shifted very quickly. Especially on like the smaller 1 to 4 family fix and flip side. Yield has been suppressed drastically. Yep. There's tons of capital out there in the marketplace. There's not as many deals and transactions going on. So there's a lot of people chasing that sort of $100,000 to like $500,000-$600,000 deal. Way more now than it was like even 2 years ago.
Right.
So although we're still heavily involved in it, we're actually a lot more interested now in focusing more on our roots of like the bigger commercial stuff, because there's a lot of players that only have funding for like these smaller 1 to 4 family units.
That's what I have.
Where we went after some of the bigger stuff, but we never like really got to really break into it because the yields were so much lower. Than now the yield spread for like a 1 to 4 family is almost the same as like an apartment building.
Residential rates.
And we'd much rather be in a deal of like a 10, 20, 30 unit apartment building or sort of like multi-unit, like a retail strip or something like that.
Now, I know, as we're setting up our operation, our joint ventures that we have going on, one of the things we're looking for is actually taking mezz positions.
Correct,
and also potentially second positions in order to help clients either bridge that gap, make renovations, give them some cash flow, cross-collateralize. So explain a little bit about what mezz financing is and the opportunity that you see moving forward in the marketplace, and who's the ideal person for that.
Sure. So mezz financing is really what you're doing is you're taking a second position on a property. So someone may come to you and they may have a first mortgage with a private lender or a conventional lender, and they need some additional capital, whether on an acquisition side to fund the down payment, or maybe they're already into a deal and they just need someone to like push the loan to value, leverage on it a little bit more, and then we'll come for a second loan to rehab a property or for like another acquisition somewhere else, whatever the case may be. Typically, although there's a lot of mezz lenders out there, they're really focusing on much larger assets. It's hard to find mezz lenders that will do like these several $100,000,
most want a couple million.
Yeah, $2 million transactions. And I think there's an opportunity there. That being said, I think you have to be very selective now because, the first one to get wiped out when things change is going to be the mezz lender.
I think it's also important to note for everyone listening is people need to understand that because not everyone does it, they're going to be paying a premium for this money. Correct. Obviously, second position, added risk. Not everyone does it, so you're not going to get a 5 or a 10% rate most likely. Correct. You're probably going to get something between 11 and 15. But if that's your only option and we're willing to take that risk on the individual, they should appreciate that. They shouldn't be like, oh, you're robbing me. It's like, well, no, okay, then I won't lend you the money. I won't rob you. You know what I mean?
And listen, and you got to look at it as a blended rate. So maybe you have the first 60, 70% of the loan to value at 8, 9%. And if you have a mezz piece at, 10, 11, 12, 13, whatever it is, blended, it's not a 10, 11, 12% rate.
Correct.
So
you have to average it too.
Yeah, so I think I do think there's an opportunity on that side. And we're also, the approach that we take is, we want to lend on the mezz side on properties that we personally like from like an equity side. We're not a loan to own type shop. We don't want to take over these properties, but we do understand that it is a risky place to be. So we want to make sure that we like the underlying real estate as well. We're not interested in doing like a 2-family mezz loan in Delaware.
Right.
Yeah.
Do you think that going back to like how you got your start and like I started obviously while in college and playing football as well, right? Mm-hmm. So like we both had that experience and we both got semi-successful from not only hard work but starting from a young age, right? Like kind of like transitioning out of school and into the real world. You had that kind of bridge, if you will, where like you were still in school but you still had a career being built. Do you believe that people that want to get into real estate or mortgage lending should start while they're in college and then like get that kind of semi-experience and then transition and evolve? Because I feel like that's the future of, the business, to get people that start while they don't need to make $80,000 to $100,000 a year to support their family and lifestyle.
When I first started, the question that I was asked when I was interviewing was,
would you like 34B or 34C?
After post-college was can you commit the next 3 to 5 years of your life to this industry? So like if you cannot, don't even start.
Makes sense.
And I think the problem with a lot of people in the brokerage world, whether it's on the sales side or the financing side, is they're like bouncing all over the place. So they never get any traction. It's like, the market gets hot and then they're jumping from like ad sales to now real estate or selling, I don't know, whatever, some sort of.
Or the mortgage company that specializes in reverse mortgages and then they suck and then they go to HARP and then they go to refinances and then they go to FHA and then they go to, whatever else, fix and flip. And it's like, dude, either do it all the time or don't do it at all. Because as you're chasing, you're always falling behind and you always have to restart.
Totally. And if you look at all the people that are at the top of their game, especially in our industry, I mean, they've all been doing it for so long. They're just pounding the pavement.
I would say minimum 10 years at this point.
Yeah, totally.
There are a couple, obviously, exceptions to the rule. Like maybe they had like good luck in the past 5 years, but they came from probably a good, solid background or foundation or had family in the business. I haven't seen many people just start and be successful.
Yeah, I agree. I think people that have the more short-term success had other, success in other industries that they're able, like they sort of understood the process and then just refocused a little bit on the real estate side. But I think at the end of the day, people need to focus long-term. It's hard to make money in this business the first couple of years.
In general. Yeah, actually, truthfully, in general. Now that it's so saturated.
From any standpoint, from the brokerage standpoint, if you're like an investor buying things. So I think you have to have a more long-term mindset and figure out how you're going to sustain yourself because, I see so many people that want to get into the business. They're all gung-ho. They start. And then like 3 weeks later, like, when am I going to get paid? You're not going to get paid for months, if you're lucky. So you need to be able to like live and keep your sanity. And some people can function at a high level when they don't have any money. And some people go nuts and they can't do it.
Yeah, we talk frequently when I call you. Usually I'm on one of my rants or like you catch me at the time where I'm like, this fucker, whatever, right? I texted you the other day. I said, I'm pretty sure kids prevent people from becoming millionaires. And you were like, absolutely, 100%. Here's my meme or emoji to like, solidify that, and then you're like add a wife to it, and I'm like, fuck that, right? Talk to me a little bit about how you balance wife, 2 kids, and all these ancillary businesses that are 24/7.
Yeah, I think the key to my success was that I started many years ago, prior to kids, and also prior to being married and all that. I feel like having the girlfriend, having the wife is the easy part. It's just when you throw the kids into the mix, then like it's a whole different dynamic.
Or if they're on their period.
Yeah. But listen, if you're trying to start a family and start a business at the same time, I'm not saying people don't do it and aren't successful at it,
torture.
But you need to really be able to manage expectations.
Throwing breaking your ankle in there, you're fucked.
Because there's a lot of emotions going on.
Throwing your ankle breaking, you're 168 pounds soaking wet trying to sleep.
There's a lot of time required on both businesses, the family business as well
and
as
yourself,
personal, and yourself. Throwing you there, and it's tough. It's really, it's tough. So, I mean, you think of a lot of these successful entrepreneurs, they get married so late in life. There's a reason why.
Or they go through a bad divorce, break up, and then 20 years later do.
There's a top broker, this lady. I can't remember what her name is, but she had a quote I remember reading a while ago, and I always loved it. And she's like, in life, you want to be the first son, the second wife, and the third broker. And I always thought that was amazing.
That's true. We should coin them. We should get a shirt made of that.
Yeah.
I love that.
First son, second broker.
You told me we got to share. Wife. Everyone's going to love this story. So tell everyone the story about your son with the quarter.
Oh, man.
It was a quarter, right?
Yeah, it was a quarter, yeah. So my wife and I were having a nice, peaceful dinner for about 35 seconds.
With some wine.
Yeah, a nice bottle of wine. We poured. And I think we even said to each other, this is really nice right now. Kids were like playing and doing their thing, and then I like if we made it to the 2-minute mark, it was a long time. And then my son comes over and he's like, and we're sitting there looking at each other like we're like, Mason, like are you okay? Like what's wrong? And he's like, and he's like not saying anything. We can see he's choking, and we're trying to think in our head like, what the hell is this kid choking on? Like he's not even eating. Like and he's 5, and we know he's smart enough to not like do stupid things,
right.
And before you know it, I literally had to like do like the Heimlich on him, and nothing came out, but it cleared, I guess, the air passage.
Right.
And I'm like, Mason, like, what the hell did you do? Like, did you swallow something? And he's like, and he's like trying to talk, and like a little bit of words are coming out, but he's still having an issue. And then I think he got relodged again. Yeah. And then I did the Heimlich again, and then all of a sudden, out of his mouth, and you hear a quarter hit the floor. And I'm like, what the, like, out of just like emotions and everything, start like screaming at him, like, bad. And, afterwards looking back on him, I'm like, what the hell are you doing? And he's like, oh, like, I'm sorry. And he was all shaken up. And then, like about like 10 minutes later, I'm sitting there talking, I'm like, what the hell happened? Why did a quarter just come out of your mouth? Like, I know you're smarter than this. And he's like, I was balancing a quarter on my chin like this. And he said, I had my mouth open and I went too far back, and the quarter went in his mouth. And he
note to self, if you have kids, tell them not to play the chin quarter game.
Yeah, and I said, and if you're going to do it again, close your mouth. Come on, don't keep your mouth open.
Yeah, I mean, I think all these things add to, obviously, good laughs. Hopefully like, breaks the ice, and like sharing like these war stories. I think it's nice having a genuine relationship with somebody that you could relate to. Like I know when I first started in the business in 2007, I was 20 years old. The majority of the people in the Bronx weren't my age, didn't have my ethics, definitely didn't have my drive, didn't have my intensity, didn't have my knowledge even at that age.
Or your dress attire. Maybe I think they did have your dress
I was rocking a fucking 3-piece suit every day. I had my hair slicked back, it was
velour warm-up suit.
It was a different world back then.
For sure.
But I didn't really have somebody, truthfully, to like call up and be able to like relate to. Right? I couldn't talk to my college friends. I couldn't talk to my football guys that I knew. I couldn't talk to the girls I was dating because they didn't understand what I was going through. And the guys that were in the business, because that decade or 15-year people got wiped out because they were all like the scum guys that got in for the most part.
Yeah.
And I didn't know you existed, obviously. It was really hard speaking to people about like commonalities and sharing stories. Like, dude, I like hooked up this hot chick last night, and they were like, yeah, I came home, had dinner with my wife, and had a nice, whatever, like apple cider shot. Like, I'm like,
apple
what?
Cider shot.
Like this isn't like, like being able to share those war stories. So I think for anybody listening, like it's super important to find people that you can relate to on a personal level that still have that same respect on a business level. I mean, I think it's invaluable.
Yeah, I found that like the best relationships that I have over the years are ones that have been developed organically, slowly, and just over the years have involved, and like we're still, heavily involved in like each other's lives. And I've made great friends. people that started off like on the business relationship side and are like very, very good friends of mine.
Sure.
At this stage in the game. So I feel like, it's a great industry. There's plenty of deals to go around for everyone,
Sure.
even if it's like a competitor, lender, broker, whatever. Right. There's so much stuff.
Well, we've co-funded some deals.
Yep. Yeah. So there's plenty of stuff to go around. I think it's, I think that mentality is like sort of like not a dying thing. It's always going to obviously be alive and well, but there's no need to have it. Yeah.
Let's talk about people so when you borrow hard money, let's say, unfortunately, for whatever reason, you're a knucklehead and you're now entering default or you're in default. What's your advice to somebody in order to work with the lender? Like, don't ghost them, obviously, but like, obviously you have some defaults and some people that aren't cooperating.
Yeah.
So
that's so very interesting. So we're in a unique spot, like some other lenders, where we have not sold any loans. We keep everything in our portfolio. So
it's all your own capital.
Yeah. So we act actually as a servicer to the loans, which gives us a ton of flexibility. And a lot of people out there don't understand what that means. So a lot of lenders out there, our competition is funding deals. Either they're table funding it, so they're not even putting like their own money into it.
None of their own money, yeah.
Or they're funding and they sell it off to some third party who then owns that loan. So like if you ever have a loan out there and you're making your checks to Jeff one day, and then all of a sudden you get like a notice, and now you're making it to
FCI or
somebody else, like a servicing company or just another lender altogether
in Iowa.
Exactly. It's very different on how your loan gets serviced. So again, we're not a loan to own type shop. Nope. So. We like to work with the actual borrower to try to get that. We have situations right now that are going on, and we're
non-replies.
Yeah, non-replies. Who actually did reply yesterday?
Oh, did he?
Yeah. We finally were able to make some ground, which is good. But listen, we want to work out a situation, and I think the another nice thing about how we're structured is we know the development side, we know the ownership side of it, so we can also add value.
So you can step in and help them.
Yeah, we can step in and help them, or sometimes people come to us with these ideas, and listen, we definitely do not know anything, but like
I mean, I've personally, my clients that I've done hard money loans for, I've personally gone into my own pocket in excess of the commission I made on the deal, lent them the money to cover their hard money loans. Right?
The monthly payments,
Yeah, but I knew I was getting it back, and obviously the lender, my lender was probably my friend, so I'm like, look, here, just so you know, I'm giving this guy.
And by the way, I don't know anybody who would ever do that.
No, because
very highly of you.
But listen, that's me, right? Like that's the type of person I am. So like when I do your deal, I'm not like, hey, here's your deal, like go on. I'm like, look, I'm sticking through this process to help you out. I don't want to see you get hurt. I don't want my lender to get hurt, and I want to move on to be able to do the next deal. Like if you fuck my lender, he's not going to give me my terms I need, and then you're not going to come back to me. You're going to not like me because you fucked up your deal.
Yeah, but and it's all about taking calculated risk, and we fortunately have the flexibility to adjust. Where once they sell that loan, they have to fit into a box. Sure. So, I mean, like I have a situation now with someone where they're doing a renovation, they really don't have any liquidity. We have a very small basis in the loan value, so like. I can be more flexible to do things I wouldn't normally do. I don't have to fit in.
Or do an advance or whatever.
Yeah, I don't have to fit in this box exactly. I know I'm going to obviously take precautions to make sure we're protected as a lender, but I also don't want to ruin the momentum for this person because that's when these people get stuck.
And resentful.
And then that's when things really take a turn for the worse. So like as long as I can stay within a safe area, we're going to try to help that person out.
Interesting.
We're not looking to just jam, foreclosure documents down someone's,
throat
and put them into default and all that. That's not our position. We really want like the coupon each month. We want to get paid off. We want to get that constant flow of business from certain people.
Sure.
And I think in this market, people don't appreciate that yet.
At all.
Because
people are throwing too much cheap capital out.
There's so much new people in the market and they haven't had bad times. These guys that are all hot shit and have 3, 5, 10 projects going on, and everything's still
money in theirs.
No liquidity, and everything's still working because they're able to time it. But once they get jammed up a little bit, and then like their lender, who's some gigantic institution, is like, go F yourself. Like I just need the payments. You're in default.
Right.
Then they're going to start to appreciate, and that's like when I found even like the last market, people start calling you, and a lot of times it's too late.
Yep.
But again,
by a lot, you mean like 97% of the time. It's too
late. So I think that's like the big difference where someone who can act as a servicer versus like a lender who's really. Like even when these people are selling these notes, they still might act as the front person on the loans, but they really are just like the front person behind the person they sold it to sort of keep face. But they don't have any. There's really not much of a say and flexibility in the process.
It's funny. I'm not sure if I sent you this. I think I might have sent you this. I did send you at the end. So I had a person reach out to me saying he needed a loan for a development site, right?
Okay.
But that never went through. And then he reached back out to me, sent me his portfolio. I reviewed his portfolio, and I'm like, dude, you have a lot of properties. I'm like, you have a lot of debt. I'm like, how far are you along with these projects? He's like, oh, I'm getting close. I'm getting close. Everyone obviously lies.
Yeah,
right?
everyone's so close.
Everyone's
like
90 days away from a sale. I'm like, dude, you didn't even fucking get your plans yet.
You didn't even put the kitchen in.
Right? Like, there's still a hole in your ceiling. Anyway, oddly enough, because it's a small world and social media, this guy reaches out to me. Hey, been following you for a while. Would love to get together for lunch. This and that, blah, blah. So, like, I drive up to North Jersey, like I had nothing going on. I haven't had much going on for the past year and a half, right, as I've been unwinding everything. And we're sitting in his truck. We go in the Starbucks. We're talking. Yeah, I gave this kid some money, but this and that. I'm waiting for my money to be paid off. I'm like, oh, cool, awesome, man. So, like, that's what you're looking for. You're looking for joint ventures. He's like, yeah, I own a car electronics shop. I got some extra side cash. I wanted to get in real estate. I'm working 100 hours a week here. I got kids, whatever, a wife. I respect it. So, like, another month goes by. I'm like, hey, what's up going on, man? Everything good? This and that? Oh, yeah. He's like, yeah, I'm about, 30 days away. So every time I started talking to this guy, he was always 30 days away from getting his money back. I'm like, listen, I don't know you, really. I don't know who you lent the money to. But if you keep getting told 30 days, like now we're legitimately 6 months. I'm like, give me the address of the property that you supposedly lent money on. Bro, he gives me the fucking address of the property. It was the kid that I was like, dude, you're over leveraged on. What's going on here? Now, how do I go back and say, dude, just so you know, like I saw this deal, and by the way, the kid came to me looking for additional money on the property that you put money into. So, again, for being in the business, it seems as if he took your money and didn't put it into this project, or else he'd be done already, and already he's over-leveraged on it. So now this guy, like, he's like, what the fuck? Goes nuts, like, shows up to the kid's house, whatever, and I'm like, look, play it cool, because, look, at the end of the day, if he doesn't have it, if you hurt him, you're never going to get it.
Yeah.
You have $120,000 that you gave this kid, right? I'm like, he has equity in the properties, but you either need to have him sign the deed over and you complete the project to protect your asset.
Which with ego is not the easiest thing.
Which wasn't an option. Or, file a lien, have your attorney file a lien on every single one of his other properties. He's got like, whatever, $700,000 in equity, right? Mm-hmm. This is the Jersey deal. Remember the 2 Jersey deals up north?
I remember.
So the kid's like, all right, we're closing Thursday. We're waiting for whatever. And I'm like, dude, I'm telling you, he's fucking lying to you. I'm like, what he's saying the reason is not the reason. I'm like, I've never heard of that before, and I've done a lot of deals. So long story short, the kid closes on Monday. So I'm like, all right, well, if you sell a property, the wire hits that day within 24 hours, not 48 or 72 hours. Like you sell a property, you give the keys over, you sign the deed, like, the deal's done. He's got his money. So he's saying, the title company, something along the lines like, they didn't send the wire, they didn't have the funds. But like, look, if you're a seller, you get those immediately, or there's an issue. Maybe you have a tax lien, right? So long story short, the kid gets like $200,000, he gives him like $90,000. And I'm like, dude, you stole 30 grand. He's like, yeah, but I got my 90. I'm like, dude, get all your fucking money out, because you don't know what else is going on behind the scenes.
Yeah, I think another thing for lenders to really watch out is that, on these draw disbursements, some lenders, and unless we did it too, where we'll cut, like, say, you as the borrower, the money for the draw, go inspect, make sure it's done, but release the money. But that money never goes towards paying someone else.
Or you don't know where it goes.
You don't know where it goes. And listen, for the past handful of years, that may have worked out fine.
As the market's climbing up.
But now, again, people are getting so jammed up in different situations. I think it's, like, really important to know, like, and even have a relationship with the contractors. I think as a lender, maintaining relationships and dialogue with the contractors and subs, especially on bigger projects, is extremely important, because when shit hits the fan, there are people that have open permits on properties. If you need people to close out permits, or you step into a job and you need to take over, it's not easy taking over when you're the electrician and you have an open permit and you didn't get paid, and you're like, oh, fuck, so-and-so.
UCC filing, whatever.
Yeah, and there's all these issues. So, like, I think you got to think of these things and have these relationships, with these people, where a lot of the lenders on, like, the bigger type of bridge lenders and construction lenders, are already used to this, but it's very loosely done.
Look, I feel like anyone. So I was listening to this story last night. You make a great point. Being a millionaire today is almost like a joke. Like, everyone's a millionaire. This is the number one time to create millionaires in the market right now. Obviously, being a millionaire is, in my opinion, a lot of fluff, right? Like, if you have equity in a property, it's kind of phantom, right? I'm talking about like a millionaire where you have
paper millionaire,
on paper, but like you actually have $1 million cash in the bank, or assets, like physical assets that are actually valued. Different story, right? But I say that because you have these fix and flip guys, like you said, never experienced adversity. Most of the fix and flip guys don't have any job. They don't own any other real estate, and they're relying solely on the fix and flips as their money, right? So, like, they have no monthly income coming in. They have really no money in their savings or checking account. So when they get their draws, usually they're paying for their gas toll, which I think is fine to an extent if it's business related. I'm not saying you have $10,000 a month in, money that you should be taking from, but you should really plan in the event of a downturn or if those fix and flips dry up.
Yeah,
like
a global cash flow snapshot is very important.
Right. Like buy a 4-family, like live in that shit for free.
You need to know what's going on. This is going to be the greatest deal that you're lending on. But what you don't know if you don't ask for it, or even if you ask for it, you still don't 100% know, is they might have 5 other deals that they have teed up. And so you see liquidity, everything looks great, but they have you and like 3 other lenders trying to lend all the different deals. And you don't know what the hell's going on. And then a deal like goes from, yes, it looks pretty, or like the deal maybe standalone looks good still, and liquidity, meets all like the passes the sniff test. But when you look at the global picture, like writings on the wall that like way too much shit going on.
Yeah, I always tell everyone, like, look, if you want an easy process or you want the best deal, you need to put all your cards on the table day one. Like if you try and hide anything or, I forgot that, like I'm like, look, pretend you're sitting in front of a detective where like if you get caught lying, like you get your balls cut off, right? And like you put all your cards on the table and say, look here, hey, I had this bankruptcy 5 years ago, or hey, I'm going through this divorce right now, or hey, I have whatever going on. Here is the real story. What do you suggest we do to get around this? And is there a way around this? And really having that upfront, honest conversation and not just say, well, fuck you, I don't want to do this. Or fuck you, I don't care. Like, why do you need that statement? Or like, what do you give a fuck if I don't have home insurance on the property? I'm like, well, let's see. If we lend you $1 million or
a homeowner policy when it's like an investment property.
Yeah, like wait, or your fucking house burns down, like we're losing our $1 million because you have no money, And I think people, if they realize, like when they work at least with us, can't speak for everybody, like we're all on the same team. Yes, we're gonna make money, but we're gonna help you make a lot more money. Like the money that we help make somebody on a hard money deal is usually 100 times what we make on our fee. Like if we make $5,000. Usually somebody's going to stand to make $100,000 to $500,000, And people forget that, again, like that value of, hey, we're helping you bridge that gap to get to the next level. And they truly forget. They think we're just fucking them for a $5,000 fee or a $2,000 fee. And it's like, dude, without us, you're losing everything.
It's, again, we're in the marketplace now where you talk to a borrower and they have tons of lenders calling them.
Right.
So it's more like, just give me like the best rate. And I actually don't think it's the right attitude, especially in this market.
I agree.
Maybe 3 years ago you could ride the wave, but times are changing now, and I think it's important even for the borrower to like invest in the relationship with your lender on both the the hard money bridge side as well as on the conventional side. John and myself, we have one bank that we've been using personally now for probably about 10 years, and we have a very good relationship with them, and it's full. Disclosure with everything, and I know I can speak freely to them and vice versa, and that's why we have such a good relationship. So when we go to them for money for like a project or construction money, there's a level of trust, and we're extremely confident we're going to get the money.
It's funny. And, I think that's kind of like, it's like Bumble or Tinder or Hinge, right? In like the real estate lending world right now, where it's like, oh, hot girl. Yeah, that hot girl got 7,400 likes today. Like pick one of 140. Whereas on the lending side, it's like, oh, well, these are all the hard money lenders that are soliciting.
We just refinanced a construction project, and we get after the closing, they wire the money into our account, and we get a call like 3 days later from like our main point of contact there, and they said, like, hey, listen, there is an error on the refinance proceeds, and we gave you an extra X amount of dollars, which was like a legit portion of money, and. They said, we have like 2 options because like you're above the loan to value thresholds that we did, and we understand it's our error. So it's either A, we can just put it on like one of your other properties that we have have a mortgage on.
Reallocate the debt.
Yeah, reallocate the debt, or you can like cut us a check back. So we're again a great relationship with them. So we're busting the guy's balls. We said, normally the bank calls us to give us money, not take money back from us.
Yeah, but those things happen.
Yeah, and it happens. And what we said, we were like, listen, we unfortunately at the time we didn't need the money, so we just we literally said just wire the money back out of our accounts and like take it and like adjust it. But again, it's the relationship. They weren't scared that we were going to be like, like the money's gone, and listen, we're not trying to like scum it. It's the relationship.
Why ruin that relationship?
Why ruin it?
I had a deal for one of my best clients. He's one of my best friends to this day, Tony Flores. I hope you're watching. If you're not, then I'll send you this clip because I'm shouting you out. But this guy, I tell you, like I met him in 2010. We did a deal. I think the first deal that I actually helped him do was like 2013. I helped him buy a 2-family in the Bronx. And then he came back. I did all his refinances. He already was established before I met him, but I helped him out. In times when no one was really lending, hooked him up. And then he wanted to do a fix and flip. He didn't have all the capital for it. he bought a property, hard money, had violations on it, 2-family in Morris Park, stole it for like 190 or 200.
Wow. Yeah.
He put up like 50,000. We gave him the money, like interest only, typical great deal. But this is like 2014 to 15, so no one was really doing this at the time. You know what I mean? Like it was all private capital, and he the house is probably worth 600,000+ now. So he made great money. He sends me everybody. Great guy, one of the best guys I know. So now it's time for him to move out of the Bronx and move upstate with his family. And we did a refinance cash out from that property where he put like $200,000 tax-free from his investment property where the tenant's still paying off the mortgages into his new house. But when he did his refinance, my friend, who's one of my best attorneys, she's been on this podcast. I'm not going to tell who she is, but if you listen to this podcast, you'll know.
Yep.
She made a mistake, an honest mistake, where she forgot to give him $18,000, whatever it was. Like whatever it was, the wire said 110 and it was 92. And she actually gave him more money, I think. And long story short, when we went to go to do the purchase, it was like, dude, you're 18,000 short. He said, what do you mean? Like, I gave that. But she made a mistake. All we had to do was make a call up. She's like, oh yeah, I had the money in my escrow account. And then we like balanced the A to Z. Now, she didn't have pride. She didn't say, she's like, oh my God, I'm so fucking sorry. I'm like, yeah, listen, I've been doing business with you for 4 years. Like you're not a piece of shit. You're not stealing my client's money. Hey, Tony, by the way, I hope you don't mind me telling the story, is look, we're all on the same team. And he trusts me 100%. So he would never come back and say, you fucked me or how did this happen? Why would you refer me to her? Like, we're all on the same team, And I think having that relationship with him since 2010 and her since 2014, like, got us over a hurdle where any other person would have filed a complaint with the banking department, the CFPB, went after her bar license.
And like I said, the team is so important.
Yeah, like
all
crazy,
these people
man.
have been doing it for years. They have their team. They're using, for the most part, the same 1 or 2 attorneys, the same architect, contractors. So that way, listen, everyone's going to have a situation where somebody fucks something up. And, where it's not like, what the hell did you do? And you're moving on to the next. Really, you work it out because you have an invested interest. You have other stuff going on. And listen, shit happens. And listen, I'm going to make a mistake sometimes. You're going to catch it, vice versa, or this. And, I think that's why it's important.
I've literally had clients sitting on deals I've advised on, right? Not on the residential mortgage side, on other deals where they're like, fuck, Jeff, I'm $1,500 short. I get paid tomorrow. I'll Venmo them $1,500 and be like, all right, give it to me tomorrow. You know what I mean? But that's the value of a relationship.
You have a very good relationship with a lot of your borrowers,
I mean, they're all. But that's the other thing. 0 of my clients have been leads. When I say leads, I never bought a lead. It was from ground and pound, and it was from personal referrals, right? Now, don't get me wrong. I've also lost a lot of money being that nice guy, but the universe works in funny ways, right? So it's kind of like risk reward at this point. I'm not going to go just give somebody $50,000 blind anymore based on our relationship. I've learned multiple times on that. But again, dude, look, if you text me, fuck, I'm in Canada, my card got declined. Can you Venmo me $2,000? Yeah, dude, I know you, I trust you. Here's $2,000. You know what I mean? And I think again, the value of that is invaluable.
100%.
I have so many people I can go to and be like, man, here's a situation, or hey, I have this client. You want to help them out? You want to do this deal? And they're like, yeah, because I trust you. Or I trust the situation, I think just being so transparent and having that go-to network is what gets people through the hard times, through the tough times, and really, do things outside the box that other people can't do.
So how do you think, listen, the market's changing. Everybody I talk to who's flipping properties, from, the investor that's doing, 1 to 3 properties a year, to some of these really well-oiled machines that are doing, or that we're doing 30, 40, 50, 60 a year, even more. Everyone is saying that the amount of deals is down tremendously. I'm finding that the people that are doing 1, 2, 3 deals a year, for the most part, are finding it hard to do, really any right now. And the people that are doing 30, 40, 50, those are people that everybody knows. If a deal comes on, you send it to that person. And they're even having a difficult time, and they have a gigantic network. Where do you think the investors should be focusing on, both the 1 to 4 family side as well as the the bigger commercial side?
I'm going to reverse answer that. So the problem is these want to be hard money lenders, which aren't hard money lenders. They're fix and flip lenders. And there's a big difference between hard money and fix and flip financing, right? You could use hard money for fix and flips, but a fix and flip lender is not a hard money lender. Let's just be very clear on that.
And what do you mean by that?
Separate that. A fix and flip lender says, I have these boxes that I have to check off with credit score requirements, equity requirements, that I have to meet these parameters, like getting a residential mortgage and then selling the loan off, right? I have to answer to Big Brother. A hard money lender from old school is guys with extreme wealth, or guys that raise private capital together and they look to return 10, 12, 14% on their money, it's all private money. They're not borrowing money to lend money, right? So there's a big clusterfuck right now of what people think hard money lenders are, where I'm like, that's not hard money. Like, hard money's not at 8%,
it's been
7%.
very institutionalized.
Very institutionalized because the big banks are missing out on those spreads and those margins. So they figured out a way to get in that game, which lowered margins, but those were mostly on bigger ticket items. Like, you're not getting a 7% rate hard money on a $100,000 deal. You might get it on a $3 million deal or a $15 million deal because of leverage and everything else, but there's no way you're doing that. So that's number one. Number two, these jerk-offs are hiring young jerk-offs for below minimum wage to go out there, tell everyone they're hard money lenders, fix and flip lenders. They probably live on their mother's couch. Their mother probably still wipes their own ass, and they're still probably sucking the nipple before bed at night, telling people, I'm a fix and flip lender, I'm a hard money lender. I'm like, you're not. You're not. So what you're doing is you're giving inaccurate information. You're giving false hope and expectation. So by the time somebody comes to me, I have to spend more time unwinding the lies that you've told them to give them the reality, right? Yeah. So they're fucking up the market, and they're jamming up the market. Now, the other thing is everyone's a wholesaler these days. Everyone.
You're saying on the brokerage side.
On the broker side and on the unemployed line side, like everyone's running around trying to find properties, right? So what they're doing is they're going and saying, hey, I'm gonna get this property for $200,000. I have no money. I don't want to fix and flip it. I don't qualify. I have to tie this property up, and then I'm gonna try and flip the contract for $230,000, $240,000, $250,000. But they can't find somebody to flip it for that number. So now you have a property sitting there. Sellers getting pissed off, and the deal gets log jammed. So there's a big kink in the train. Like, you have the caboose, and then you have the front, and in the middle is where all the shit gets stuck. So people need to put money to work. They're sitting on so much capital. I had people literally doing fix and flips just to pay their crew. So one downturn,
so
they're fucked. Yeah. The other thing that I see people making mistakes on is, hey, this is a beautiful one-story house. It's a ranch. If we add a level, we're going to make another $100,000. I'm like, it's going to take you an additional 12 to 18 months, okay? You already have $800,000 borrowed to do everything. So you're not only carrying that on that money, like you might finish the first level.
Risk reward.
Like, okay, so all right, so now it's going to cost you $84,000 in carrying costs to make another $100,000, extra $16,000. Like, sell it as is, you know?
That's just like saying even developers on the bigger scale. Just because your architect says that you can max out this lot,
it's nuts.
This doesn't mean that you should do it and get the biggest community facility.
Right. So
there may not be a demand for it, and it may not make sense.
It's absolutely insane
in terms of like the cost of construction and going up an extra couple of stores.
And these are experienced people making this mistake, and I feel like they're doing it either out of fear, they're doing it out of greed, they're doing it out of desperation. A lot of the guys doing it are also real estate brokers, so like they don't care, they're still making the real estate commission. I'm like, yeah, but look, again, risk reward, it's not there. Where I see the opportunity is, again, building the platform to have access to all the products, right? So like if fix and flip slows down, you have the commercial financing. If those two things fall down, right, now you still have the hard money financing. You know, you have to have those alternate financing options. We spoke about this options.
Where, you know, like the platform that we're trying to collaborate on here is where you have your in-house bridge fund for the hard money lending side. And then once you're stabilized, we already have all your information.
Take your loan out.
We know the deal, and then we can help go out there and bring it to different conventional banks or agency lenders to refinance our debt. And when we're approaching that lender and saying, listen, not only are we coming out here trying to arrange the financing, but we also have the note on the property.
Full capability.
You know, like we fully know what's going on. We obviously believed in the deal, otherwise we wouldn't have given the money. And it's worked out very well. And from a client perspective, the investor, they love it because they're like, you already have all my shit. You already know the deal. I already trust you because you came through to this. If you're helping me on the refinance, like if you know your loan expires in whatever December 31st or something like that, and we're into January for the refinance, you're not like in default or something like that. There's no like issues in terms of like an extension fee or nothing like that. And we've had a lot of success with it. And I think that's like the model that we want to continue to go with. And listen, right now our conversation probably 2 weeks ago was, are we going to be the first choice of lenders for a lot of people right now? Probably not. Not. But we're fine to be the second or the third right now. We know that's going to change. There's going to be a shakeup in the industry.
Completely.
And we're going to just stay focused, stay on our path. I'm not looking to go now from lending and you talk to me in 6 months and now I'm trying to sell
sneakers.
Or like printer supplies or something.
Yeah, we're going to be here long term.
We're here
long term. We have the back track
records.
We've
been doing it for the past 15, 20 years. And we're here to stay. And I think
I think where the opportunity in deals are, personally. For people that are out there listening, I think picking up stalled projects, stalled development sites, and also estate sales. I think the estate sale market is so underserviced. And if you have an attorney or a bankruptcy attorney or somebody, like usually they get activity on estates, right? When someone dies, like you usually call your attorney first. Hey, what do I do? Or like you're a financial advisor, right? You can go in the paper, look at obituaries, and then like cross-reference if they own the property. I think
there's even services out there that we just pay
completely.
your monthly fee of whatever, and it gives
right.
you the names
And
numbers.
estate sales, and then those are the ideal properties for fix and flips, because usually if someone unfortunately dies, their home's probably stuck in the 80s or 90s. It needs a lot of TLC, and because it's an estate, usually the family is whacking the money up anyway between 2, 3, 4 siblings or heirs, right? So the difference between them selling it for $250 or $300, at the end of the day, they really don't care. They're still getting their money, which is found money. And
a
again,
lot of times they want a sure thing and a quick
correct.
thing.
They want an all cash deal. They know the house looks like, pink and blue from like the 1980s sitcoms.
Yep.
And, I think the more people that target estate sales, the better off they'll be, obviously, if you have patience, because these things take time to go through probate and all the other crap. And the other opportunity I see is on defaulted reverse mortgages. No one's talking about defaulted reverse mortgages at all. And I think the banks and FHA, because FHA backs reverse mortgages, if you didn't know that, the government does.
Okay.
And they have this rule where, like, if they foreclose on you or you die, you have like 30 days to transfer the property into someone else's name, your heir's name or the estate. And if they foreclose at, let's say, $600,000, they legally can't sell the property for less than $600,000. So these properties are literally just sitting there with a defaulted note at $600,000. Now they might only be worth $500,000, and because their guidelines are so stupid, and whoever wrote these rules is a complete moron, they're just sitting on these properties, right? So maybe going in, negotiating with these servicing companies, hey, look, we'll take the property at $600,000, zero interest. Like, all right, we'll take the deal, but you're going to deed it over to us, and then we'll pay you back, $600,000 over 30 years at 1% or 0%. Mm-hmm. And I can tell you for a fact, nobody's doing that, and that stems from my bankruptcy attorney that I know very well. Oh, she's also a real estate attorney. She's like, look, I have so many defaulted reverse mortgages now that people haven't even paid their taxes on in 3-4 years. Now they're being foreclosed on, but the house isn't even worth close to what the amount that they owe the bank is.
Yeah, that face value amount.
So I really, and look, it's sad because, and this is why I say, like, the market might be safe, but the individuals, the consumers aren't, right? The older people aren't. People who go through divorces, breakups, lose their spouse, whatever it is, like, cost of living so high.
They fall on hard times.
Yeah, and like that's always going to happen, and humans are always going to make errors, and humans, with the click of a button now, you could order everything from your phone, and usually it goes through whether you have the money in the bank account or not. So I think people need to really take on like a financial responsibility, and if you don't, like, don't wait till it's too late. Like, don't wait until the marshal puts like time to get out on your home. Like, talk to people, get advice, and see what your options are from somebody who's been around the block. Don't just like Google like home relief and talk to Joe Smith from Newark, New Jersey, who's running a shop out of his car. You know what I mean? To like give you advice on how to try and steal your property from you.
One of the worst things and this is from like the borrower standpoint, it could even be from the lender standpoint. Like, if you're having an issue, don't go radio silent.
Communicate.
Oh man, you got to communicate, and that's again, that's with everything in life. If you're the borrower and you're having issues and you're not communicating with your lender is going to get to a point where they get really pissed off.
Yeah, enough's enough.
And they're like, they don't even want to deal with you anymore, waste their time with it. And then that's when you go to legal and it's like, just deal with the attorney. And then you're in like a downward spiral. So listen, everyone falls on issues. Just be upfront about it,
Completely.
If you have an issue as a borrower and you run into a jam, I can't just like then come to your house and take the keys right away. Like, there's still a process,
Sure.
So just be upfront. Say, listen, here's the situation. I got a little jammed up. I need like a month or two
help
for
me
this.
Because of X,
Here's
Y, and
like the whole thing, what's going on, like how do we get out of this? And I think that's like that's key. And again, especially in this market, a lot of new people, they just don't get it. They've only seen good times.
I don't think they want to get it, and like with their pride and own insecurities, like they don't want to admit it and get it. Yeah. I could literally sit there and be like, look, if you do this, you'll be okay in 3 months. And they're like, no, fuck you, I'm gonna wait for 3 months and I'll call you back. I'm like,
yeah, I mean, even we have situations where you try to bail people out of a situation. They're like, no, I want this. We're like, no, you don't get it. Like, you're going to have shit.
And they don't care.
In like 6 months or like a year.
They don't care.
So why not just take X amount of money here? You can you won't have any blemishes on your track record.
Yep.
You can show a face and you have a successful project. We'll work with you where you did it great. So you can still build on your career in the future and just like get out of here. So instead of making this, you make this, but you're going to get out of the deal alive,
and ahead of the game.
Yeah, you get out ahead of the game and recover, like, maybe not all your money, but you get a chunk of it, or maybe you just don't make as much, but you still make something. And
Now,
again,
we also-
you live to fight another day.
We also spoke about potentially coming in on stalled projects, people that are jammed up, and becoming equity partners with them, taking out their debt and literally taking on the full responsibility and giving them a piece of what they would basically be losing. Talked a little bit about like the structure of that and how that would work for somebody, ideally.
Yeah, so again, from being the debt standpoint could be risky, and it takes a long time. God forbid, issues arise. But if people come into a jam and there's a way for us to step in from like a JV equity side, we feel a lot more comfortable, and we can structure a deal with the borrower investor that's at the table where we're essentially leveraging off of each other's skill sets and expertise, to finish different projects. So, it could be where someone's coming to us right off the bat and they want to do a project and, they just don't feel comfortable with like the monthly expense of carrying it like a private note, and there's no way to sort of roll in the payments to it because there might not be enough equity where, we'll come in and partner on the deal to do the particular project. Maybe we're putting in all of the money or we're putting in a chunk of the money. They maybe still run the show. Maybe they don't even want to run the show. Who knows? What it might be.
Each deal's so unique.
Each deal's so unique. Or it could be someone that ran into like a jam. Like we have someone right now that we're talking to has a retail strip and they have some issues with vacancy and they can't pay the current lender, and they're already in default and in the process of losing the property, and we're trying to structure a deal where we know the deal has a lot of equity into it, where we can come in and this one may even work just on a straight debt play where we can help them stabilize, lease out the project, put in like a crew and to actually operate it, and have it where they can refinance and put a conventional note on it. And this one we're evaluating, like this particular person may not be able to get conventional financing. We're like, listen, we can pay off the lender, we can bring in additional money to finish the renovations, help you stabilize it, and we have the track records with conventional lenders to get a mortgage on this place for your high 3%, 4% interest rate, and you're going to be in a much better spot. So like at first the person was like, oh well, then we're partners and all this. So I'm like, you're not making any money. You're going to lose it. You're going to lose it anyway. And nobody's going to give you a legit interest rate. They're going to be charging you 9, 10, 11, 12%. So like you're still going to make more money, and like at least that everything is running smoothly. So, again, I think that's where like we have the advantage to do it, especially in our backyard and like the boroughs, Westchester County, to really step in and act as a partner in the deal.
Yeah, I think it's important to say is like one of my specialties that I know I've done multiple times is I've taken people on the commercial side out of foreclosure, right? Jacked up credit, out of foreclosure with hard money. In 2-3 months, once everything's stabilized and everything looks good on paper, and I properly show them how to set up their profit and loss and cash flow analysis, right? The right way.
Yeah, of course.
Like where Aunt Betty isn't getting the monthly rental income, and Aunt Betty doesn't really exist. Aunt Betty LLC, and we structure on paper. It's important that commercial banks will lend on that as long as the cash flow analysis is there. Now, granted, you're signing everything over, right? And they're doing they're intercepting the rents, but they'll lend on it if it makes sense. So even if you do fall behind, or even if you do have vacancies or blemishes, there are banks out there that aren't at 12 to 16% that will take on your debt as long as it's structured properly.
Totally. And then, and even for people that are losing a property and there's not much equity, there could also be a play where that lender, there's no incentive for them to go through the whole process of foreclosing because there's no equity. There's no equity in it. So, that person probably wants to get out of the deal. Okay. And there may be a situation where we can come in and listen, we know what that lender is going through and work out a deal with them where they're happy to get out of it. Maybe they even want to stay in the deal, for whatever reason may be for that particular project, where we can do like a JV with them and or convert the debt to the equity. I don't know. There's so many scenarios.
Yeah, best advice is just reach out. And
just reach out. Every like you said before. I mean, every single deal is very different. And there's nuances with all of them, and on both the real estate side and then also on the borrower side.
And it's also super important to understand that it's Matt's and his group's own capital. So we don't have to go to a third party. We can go to a third party if we need to or want to or feel maybe like this asset isn't in our wheelhouse of lending, but we have guys that will come in based on our discretion. So, as we close up the show, we usually leave everyone with one thing to deposit to their memory bank. So based on all the years of experience, all the business ventures you've done, what you currently do, wife, kids, everything else, what's one thing you want to leave the listeners with that, they could implement immediately into their daily life that will get them on a better path or scale their path that they're currently on?
Great question. Great question.
Don't play chin quarter game.
Yeah, don't play the chin quarter game or keep your mouth closed.
Yeah.
You know?
That's a good one. I like
Yeah,
to keep your mouth closed.
Yeah,
Right.
yeah. On the keep your mouth closed, I was once told, you have 2 ears and 1 mouth. It's because people want you to, you're supposed to listen twice as much as you talk.
I like that.
So, I think that's, everyone knows everything now. No one wants to hear anything. I know more than you know. You know more than I know. And everyone's just like, it's a big clusterfuck.
Yep.
So, I think just listen and learn and be open-minded. Listen, I don't know anything. Far from it. I'm constantly learning.
Me either.
I'm constantly screwing shit up and then trying to figure out, why did I just screw this up? How do I correct it? Because it's expensive to learn
Personally,
by
I'm professional.
screwing it up. Yeah. So, I think, listen twice as much as you talk. And just knowing that you don't know.
Yep.
So
admit it. So
yeah.
you can get the right advice.
And get the right advice, because it's a much smoother road and a more successful road long term.
So everybody go follow Matt at yourhardmoneyguy.com. I'm sorry, it's just at yourhardmoneyguy on Instagram, and coming soon, Bricks Advisory, and we look forward to putting a lot of money out in the market this year.
Yeah, thank you everyone that's listening.
I appreciate
you having me on here. Yeah, great time.
I'm glad we got to the city at 9 a.m.
Yeah, exactly.